What's up guys, welcome back to my channel, and today I'm very excited to talk about a topic that is so important yet we did not ever learn at school, which is investing your money and how to make money work for you. And specifically this video is about investing money in the stock market. And if you clicked onto this video, you're probably a beginner looking for ways or guidance to make money in the stock market even while you're sleeping. And if you are that person, this is the video for you. And regardless of if you're a beginner or not, this video is still very helpful for you to understand the foundational basics of investing, and I hope you will enjoy it.
And just a quick disclaimer, I'm not telling you what stocks to buy or in any way advising you to make any specific decision, because at the end of the day, the stocks or the investment that you buy are your own decision, and I'm just here to help you, and hopefully that we will make a lot of money together.
So at this point you are probably wondering, what is a stock? So a stock means that when a company IPO, initial public offering, is when they make their stocks available to the public investors in order to raise capital and to grow their company. And this is when you guys can invest into that company and own ownership of that company. A company stock is offered in the unit of a share. So if you bought a share of Apple stock back in March of this year, you've made a profit of almost 100% of return investment. And I just want to clarify myself a little bit, because you do not lose money unless you sell the stock. And likewise, you do not make money until you sell the stock. But in theory, you've already made over 100% if you bought the Apple stock. Now that you have a little bit of understanding of how the stock market works or how it's offered to the public, you are probably wondering, why would I be investing my money into the stock market? The number one reason why I invested, because it is free. You don't have to pay any tuition or anyone to teach you how to invest. This is all free information out there for you guys to watch and to learn, to read about. So it is literally the best thing for you to just do your own research and make money on your own. The next reason why I invested in the stock market is because there are great businesses out there who are making billions of dollars every single year, and I don't want to miss out on that. For example, Apple made $265 billion in 2018. Yes, I know, just take a minute to let that sink in. And one of the reasons why I talk about Apple a lot is because I genuinely enjoy their products. I like how their business work and their financials are on point, and I have the largest holding in Apple in my portfolio, and that's why I will talk about Apple a lot in this video. And the beautiful and powerful thing about investing in the stock market is you can literally pick a stock or a business out of your everyday life, invest in them, and if you believe that they will do well over time, or if they are doing well over time, your wealth will grow with the business. So that is the powerful thing that we have access to grow our money. Another reason why you should consider investing is because of the inflation rate. And this is a concept where your money loses its value over time. So the $10,000 you have today will not be the same in 50 years. And your purchasing power will be decreased significantly over time. So this is why you should invest your money into the stock market or any type of investment, so that you can go along with the inflation rate, and hopefully it will beat the inflation rate as well, so you can protect your own purchasing power. And I will link a few articles below so that you can read more about inflation rate and how you can protect yourself against it if you want to go more into details. A very powerful tool to consider when you're investing in the stock market is the concept of compound interest. And I'm going to attempt to explain this in the easiest way possible. It means that you are reinvesting your interest on top of the interest that you gained. Let's say that you start out investing with a $10,000, and this is your principal. $10,000 is the principal that you started with, and at the end of year one, The stock market generally return an average of 8%. So let's say that you gained $800 at the end of year 1. Instead of taking the $800 profit, you reinvest those back into the stock market, and now your year 2 principal is starting with $10,000, and if you keep doing that over time, you will have a lot of money. That's too simply put. And I will link more articles or videos below for you to watch and understand more about the concept of compound interest. And now that we've gone over the boring yet important stuff like what is stocks or investing or why you should invest, I'm going to go deeper into the strategies that are available for investor and what I do myself. Before we go into the different types of investing strategies, I want to talk with you guys about the difference between speculating and investing. Because when you're speculating, you're asking yourself, you're doubting yourself whether you should invest in this specific company or not, whether they will make a profit or those sort of question, because that is not investing, that is speculating, and you're likely to lose money when you speculate about a stock because you're seeing the trend goes down and then you see people selling out and you're stressing out and you're losing money and you're likely to sell the stock at a low price and admitting loss. But when you invest in a business, no matter what the stock does, you believe in that business and you're likely to hold on to that business and to that stock for a long time, and that will generate a lot of potential room for growth in your money. Just to rewind back to about 3 months ago, I started to heavily invest it into the stock market, and at first my stock went down by a lot because there was a pandemic going on and businesses were struggling trying to figure out their financials, and I didn't panic because I've done my research onto the stocks that I invested in, and I'm very confident in their financial strategies and how they will be able to get back up because of the cash flow that they have. And no matter what, I'm still holding on to my stock. In fact, I even bought more when they were at the bottom because I know their businesses are so great and it was offered at a discount, so why not buy more and make more money? So that's how I think you should look at it, because you have to invest into the business instead of the stock. You have to look into why they are great businesses, look at their financials, just learn to read annual reports or look at their revenues. Are their revenues increasing every year or are they losing money every year? And that is a good sign to see whether you should invest or not. Obviously there's a lot more you can look into a business before you invest, but those are at least the minimum research that you should do before you start investing in any company. And finally, we're going to talk about the two different types of investing strategies. One is short-term investing strategies and the second is long-term investing strategies. And for the short-term investing, you're generally going to hold the stock for less than a year and then it will be out of your portfolio and you're going to take profit, whether it is profit or loss, you're going to be out of it. And for the long-term investing strategies, you want to hold on to the stock and you're investing in the businesses for a long time and you're getting the full effects of the stock market for the long run. And for me, I chose the long-term investing strategies because that is the strategies that Warren Buffett used, and I've been reading about his books and his investment strategies and I think that I align with it. So that's why I chose to do long-term investing, and I don't want to have too much stress on my mind about whether the stock market is going down or not. And if you're that type of people, then long-term investing is for you. I will be talking about long-term investing because that is the strategy that I have went with and I've made a lot of good returns with it, so I am very happy. And I want to share with you guys how I did to get started. And from what I read about the charts of the stock market, overall stock market, they always average about a 8% return on your investment. So that is a great indicator that you should become a long-term investor in the stock market because it almost always gives you a good return. As of now, I hope that I've given you a lot of useful information on the stock market and the basics of investing, and now I'm going to actually show you how to get started. You're probably very eager to start investing now, and before that you will need to start with a brokerage account, and personally I use Robinhood because they don't charge for commission fees, which is when you sell or buy a stock they don't charge for any fees. I know people said there's better trading platforms out there, but I personally use it because it's user friendly and it's very easy to use, and I've been having a good time with it. If you decided to go with the app Robinhood, you can go down to the description link below, and I posted a link where you can sign up for the brokerage account, and then you will be able to get a free stock out of it. And also it is FDIC insured, so up to $1.25 million, so you have nothing to worry about when something happens to your money. It is insured. Well, unless you have more than $1.25 million in there, and then you should be worried. So you have download the app, link your bank account in there, and start your first deposit. You're probably wondering, what stock should I buy and what are the options available for you? And when you're first investing, you should look into companies that are blue chips company, like big companies like Apple, Amazon, Walmart, McDonald's, or like Waste Management. I know Waste Management is a weird example to give, but if you think about it, the waste management business will never go out of business because we always generate waste, and if you look at your trash bins, they are by Waste Management, and they are literally all over the US, and they will never go out of business. So business like that, business that you know that will stick around for a very, very, very long time. And the second things you should look at is their chart. This will not be helpful for long-term investing that much, but it will give you a very, very good idea of how the business is doing. If you look at their historical chart and the trend is going upward, then that's probably a good indicator that it is a good business. The third thing to look out for is dividends. So dividends is the money that they use to pay for the investor for investing in their company, and companies like Coca-Cola have been paying their investors for over 50 years, and they've been increasing their dividends every single year. So that is a very good indicator that it is a good business and is here to stay for a long time. And another thing that you should consider is to understand the core of the business. So if you don't understand the business, why will you invest in it? And there are things like ETFs, which is a exchange traded funds. It is a stock itself, and it will, if you put your money into this stock, it will diversify your money across the industry that you choose. So let's say that you want to invest into the real estate industry, but you're not sure which company to pick, and you assume that the real estate company or the real estate industry will go up in the future. You can find a ETFs that is investing specifically in the real estate companies. There you go. You don't have to stress about whether which stock is the right one or which company you should invest in. You can simply invest into ETFs, and you should look into that. And the last thing that I want to leave you on is to not put all your eggs into one basket. It means that you should not invest in just one industry. So let's say you love stocks in the tech industry, but who knows, like one day it will go away. Most likely not, but I won't take the risk. So if you want to invest into the real estate industry, you should also invest in different industry. And if you don't want to spend too much money on one share of stock like Amazon, you can buy fractional share, which means that instead of paying over 3,000 for one share of Amazon, you can just buy $10 of Amazon or $100 of Amazon. That is called fractional share, and that is the option that is also available for you investors. The last thing that I want to end this video on is to always diversify your money, meaning that you should not put all your money into just one stock or two stock, because what if one day that great company that you believed in is going down, or something happened to it unexpectedly and the company is forever gone, meaning that your money is also gone. So you should always diversify your money. At least pick 10 stocks that you believe in and make sure that your money is diversified and that it is ensured that if one company go down, you still have the other 9 and you won't be suffering a great loss. Another thing to remember is that to never sell when the stock goes down. If you have done your research on the business, on the company, on the stock, you should never ever sell your money and lose money, because the business is great, it will eventually go back up and you will not lose money. So never sell at a loss. In fact, I bought more shares of Apple when it went down and made even more money. And to summarize today's video, you should always understand a business before you start investing, so that you will never panic sell when a business goes down, or like when a stock goes down. Diversify your money, never put your eggs into one basket. And lastly, find books to read about investment. And I hope you guys find today's video very useful, and if you find it useful, please leave a like and subscribe, and see you guys next time.